Let's start with your word of the day, Kevin.
My word of the day, Frank, is restrictive. Now, the geopolitical events are dominating the headlines, and for good reason. But we do have a Fed meeting this week, and I think markets are going to be paying very close attention to the path of interest rates. And I could make a case that I think that we're already in territories where we're getting a little restrictive, and we need to start having a conversation at least about rate cuts.
All right, so you think we need to have a conversation about rate cuts. How do you think oil plays into all of this? We were just looking at it earlier. Oil's up about 1 and maybe a third percent. It's been kind of moving. It's off of its highs, or is up more than 1.5%, but still higher. The president also saying on Truth Social that there is no ceasefire. He did not come back for a ceasefire, but he did come back reportedly to go to the Situation Room and talk to some of his top security advisors. What do you make of that risk when it comes to the economy and also inflation when it comes to oil prices?
I mean, it's problematic for the Fed because if not for the bump in oil prices, Frank, I think we could easily be talking about a rate cut this week. Now, we have tariffs and we have an issue here with oil. That's going to take any rate cut off the table this week for sure. But we get a post-game presser, which is always interesting. We do get dot plots this particular meeting. So anything that's dovish, anything that's pointing towards cuts towards the end of the year, I think can be very constructive. You know, it's hard to parse through the geopolitics right now. The conflict in Israel and Iran is very legit. It's very real and scary. But our job is to look at the economics behind that at times. And I think this week we've got to pay close attention to interest rates, because if you think of a 1% GDP in the third quarter, then growth is slowing. If you look at the labor market, although still super resilient, it's cooling a little bit. Last week with CPI and PPI, inflation was coming down closer to that 2% target. And again, if not for tariffs and a bump in oil, we'd be talking about rate cuts here. And I think that's the right thing to start thinking about. You don't want the Fed to come to the rescue too late and start cutting rates because we're in a slowdown. It's a really fine needle to thread, but we'll see what they have to say tomorrow after the meeting.
All right, Kevin, you're also paying attention to the geopolitical conflict when it comes to your stock pick for us today, which is RTX. Why is that a good pick in this current environment?
Yeah, I mean, it's almost too timely when you think about what's happening. We picked this up. We've owned the name for a while, Frank, but we added to it a little bit last week when there was an indication that there may be some additional conflicts in the Middle East, which certainly happened. This is a 17 PE multiple, so still a good value name with a growth component. Pays a 2% dividend, so you're getting paid while you wait. Mm-hmm. And if you think of the three components within Raytheon, they really focus on aerospace, defense, and missiles. And they're one of the few companies that can sell to countries outside of the U.S., not exclusively, obviously, but definitely a name that in this environment makes a lot of sense. And they've been hitting all-time highs. Again, sort of cliche, but this is a stock that we've owned for a while. We added to it last week, and we certainly like it long term. I'll just give you one stat. I know we're pressed for time, but we're seeing $2.7 trillion in spending on defense last year. That's a 10% increase, which is the largest increase since the Cold War. So sadly, defense is a name you want in your portfolio.
What about some other names that were higher in the pre-market? Northrop Grumman, Halliburton, we also saw those higher. Do those also seem attractive to you right now?
Yeah, I mean, this whole space is butting up against all-time highs, including GE. So you want to just look at multiples, make sure that you're not chasing something. But yes, I think the space in general, you need to have at least one or two names in here for a diversified portfolio.